a success blueprint. Okay, there are always 3 whys. Why do you want to invest? Then the next level of starting from the top, why property? Why real estate? Why can't I just do stocks only? Why can't I just do options? And then why us? Why me? Now, why invest is very clear. I think we all can agree that we are all here to invest to make our money work harder. Some of you want to retire. Some of you don't just simply want to fire a boss. You don't want to work, right? And you actually like to have freedom to travel around or spend more time with your loved ones. So we have reached that level Maslow hierarchy of needs. We have gone to self-esteem, self-actualization, right? These areas. So we all can agree that we want to get rich. We want to be financially free. Rich is very subjective. Some people 1 million is enough, US. Some people 100 million. So it depends on the lifestyle that you want. So what do you want to achieve in life? Why we are here? Why do you attend the Retail Rebellion? Some of you have signed up for some Piranha courses. Some of you have not. Some of you here are just to curious what's this all about? What is property? How come there's a property course? And why do I need to learn this? And it's only stocks and options. Well, many routes that leads to the top of the mountain. That's what I can tell you. So it is not just one thing. It is many, many things that contribute to it. Okay. So the more skills that you learn, the better you are. And the wealthy people, for example, you observe, wealthy people have a portfolio of stocks, real estate, physical estate, private equity, and options, and they hire professionals to do for them. I deal with people that are billionaires and all that. I can see their patterns. Okay, they do, some of them even do fine art. So why we here today? For many, many reasons. Some of you want a car, a Ferrari. Some of you just simply want to take a break and go around the world. Okay, so these are powerful, powerful reasons. When you paste it on your laptop, every day, when you look at it, my God, your mind will seek the solutions to get there. Okay, so why? Again, let me address why invest. Can you invest in property while holding on to a full-time job? I'm going to address all this. So this webinar is free and easy. Just ask as many questions as you want. Unfortunately, I wish it is actually a physical webinar, so it is more powerful. I can talk to you guys. But if not, just write down the questions that you have, and then we will answer them. Okay. So property investing, can you do it while holding on to a full-time job? Well, there are a lot of role models. So when you have a problem, right, you wonder. Nowadays, you can go to ChatGPT, you can ask, how many people have made it rich while holding on to a full-time job? You know, can I do 2 things at once? Can I multitask? Which one is less time consuming? And what if I don't have money? You can write that, right? So ChatGPT is very useful now. Now, if in my time, of course, if you Google, you want to know, you want to reach a solution, you look for people who already are there. They have made it in life. They don't have to be a billionaire. They just got to be a few steps ahead of you, right? Am I right? Hey, so I started looking for this journey about 15 to 20 years ago when I was in my 30s. I was working so hard and wonder who has made it in life other than the lucky few that jump out and started the business and then, made it rich because he started Facebook and all that. I'm not Mark Zuckerberg, so what can I do? What can a common man do? Right? I don't have a brilliant idea. So I started to look for people who invest and did well. Now, this couple were in UK. They were school teachers and they started investing in 1995. They were holding on to full-time jobs. So these are the things that inspire me. So during that time, prices everywhere around the world were rising, real estate prices. And they buy something for 50,000 pounds. Within a few years, it jumped to 70,000 pounds. And in those days, the banks would just lend you money, right? And the rental yield was so high, it's about 8 to 10% yield return. okay, just from rental alone, and it's higher than the mortgage rate. So they keep the prices keep going up. They start to refinance and then take out money, borrow more from the bank, and they still cash flow positive. And they buy in very high demand areas. They're very sharp. They were also very lucky. So most successful people have an element of luck. They happen to be at the right time. They wake up, okay, and they find out this is the right way to go. So they got out of property in 2015 because he's in the 70s and they decided enough is enough. So they sold. And today they are worth over 100 million. Okay, so my journey started like that as well. I started off looking for people that are where I want to be in a couple of years' time. And it could be in property, it could be in stocks. I don't really care. It could be also in crypto. And I learned their steps, how they do it. Okay. Now, when you talk about property, there are also questions of if I don't have money, what do I do? I hardly can get savings and all that. Okay, so property is very interesting. It is one of those asset classes that allow you to leverage. It allows you to leverage. Okay, safely. I'm going to put some things in the chat group. Correct? Now, you, wherever you are in many countries, I believe you can borrow money from the government or the banks when you buy a property, whether you're in Malaysia, Egypt, I'm sure there is some. Only in the most developing countries, the banks don't lend. Now, what I want to say is that you should learn the knowledge first. First of all, understand how to invest so that you don't make a mistake. And the thing is that if you don't learn the knowledge, and then when you get all the money that you want, it's very easy to lose your money when you don't have knowledge. So learn the knowledge first. And then when you get the money, you can go out there and then go and raise funds from family, loved ones, and close friends. Now, in property, it's very interesting. Most of us learn how to raise money from our friends and family first, whether it be later on somebody will share with them their testimonials. And it is very easy. There are a lot of people out there with money but no time. Some of them have money, time, but no knowledge. If you have knowledge and you have time, I'm sure you can fit the bill. You need three things to be successful. Okay? Knowledge, money, and time. Now, if you don't have these three tripartite, what you can do is at least have time and knowledge. And then people with money, no time, will give it to you. All right? So you can raise funds from people who trust you and do proper legal documentation and comply with all laws. And then you can invest for them. With as little as $30,000 to $40,000, you can invest joint venture partnerships with friends. Okay, 50 to 100,000 partnership with one or two people, it is possible. So we have a lot of ideas. We do know that not everybody is at the same level. Not everybody has the amount of money to kickstart something. Okay, so we want to answer all these things that that might be an issue. Okay, now it is, so I'm trying to tell you that it is possible. Now, why property investing? Now this gets very interesting. So now, why do you want to invest? We all can agree, right? Am I right to say that? All can agree that we are here to learn how to invest. That's why in Retail Rebellion. Now, how do you achieve financial freedom? Should it be stocks? Should it be options? Should it be property? Or should it be all three? Okay. I come from a camp that I do all three. I do all three. Now, why? First of all, if you have money, it is very easy to, if you have $1 million, if you choose to buy stocks, it is very difficult to leverage and it is very dangerous to leverage. Okay. So I'm telling you that it is better better to just invest with what you have. So if you have $1 million, 50% returns in 5 years, okay, gives you no leverage. It is a bad thing. Okay. The taxes of property is very high. It's very high here. Okay, it's very high. 50% return, you're not going to even achieve that in 5 years is only 1.395. It's worse than leverage. So you buy 4 property. Okay, but if you leverage, you can buy 4 properties. And with 75% loan to value ratio, that means you put in 1 million, you leverage up to 4. So you put 1 to 4. You could potentially leverage up to 3.72 million. It's not, why is it not 4 million? Because there are taxes, there are costs involved. But even then, the cost is very high, right? 50% return in 5 years, $5.58 million of assets at the end of 5 years, 2.79 million of debt, you achieve 2.79 million net worth. Is 179% return on cash. Okay. So the other thing, of course, that if you buy properties, you must be very careful when you leverage, because if you buy in countries where the cash flow is negative, all you have is capital gains, and the rental cannot cover your mortgage, and you every month you have to top up a lot of money, then it's no longer, it is a very dangerous thing. Then you got to lower your leverage. Correct? You got to lower your leverage to 50% and 40%, then your return will drop. But at least it's safer. So there are some countries where the yield is very high, super high, and then you can leverage to a lot, and then you are still positive cash flow. As long as you're positive cash flow and you can predict where the tenants are coming from, you will have very strong demand, then you're safe. All right? Cool. Okay, so now, the difference between property and stocks. Leverage means borrowing from the bank. That's a good question. Thanks for it, Zona. It's borrowing from the bank. So that means if you want to buy a property, say of $100,000, you borrow $50,000 from the bank. Okay. Now, the difference between property and stocks. If you buy a stock, an Apple share, how many of you try to go to the management during an AGM, annual general meeting, and say, hey, can I got some opinions, Tim Cook, can you do this? I don't like the way your Apple Vision goggles are terrible. Can you change it? Because I can't, it's not gonna. Let me explain to you whether can you really change anything? Well, unless you are a billionaire that, Warren Buffett, they took a large share, they won't listen to you, right? So you can't even table your questions. Before you go for the AGM, you must write down your questions that you're gonna ask. And then they will filter out only the good questions, then they will ask. Okay, so you will teach you for property, you can create your own capital growth, and that's in your control. You can dress up your property, you can build. If you have a landed property, you can build at the back, you can make your toilet nicer, kitchen nicer. It makes a lot of difference. Okay, I give you an example. I own a property in Singapore. It was very old, and because it was very old, the tenants, the kind of quality of tenants that I got was not so good. And I refused to invest. So when I tried to sell, there was a problem. There were very few viewings and nobody wanted to, put out an offer. Now, 2 things I did that changed the story. First of all, I invested about 50,000 US to dress up the property and make it nice. Number 2, I found because it's very nice and it was very near a good school, I managed to rent it out to students. And the rental yield increased from 3% to 6% yield. Okay, that means if you're $100,000 property, the rental per year increased from $3,000 to $6,000. Okay, so now, next thing, properties do not drop as much as stocks. Okay, by now stocks are like that. It goes up, it goes down, it goes up, it goes down. Most of the people are freaked out by this, but it is also good. I think stocks is that you can buy something like recently, if you join the Piranha Group, is United Health, right? Warren Buffett just bought. How many of you bought United Health? Good on you, man. Put a pat on your back. They're going to increase their premium, insurance premium. They drop a lot and you can buy. Okay. However, it's not good for your heart. Now, property is very smooth. It goes like that. Okay. So it is a different animal, not because it's simply no mark to market and it's heterogeneous. Heterogeneous means Property is very different. One, the same block of apartment, one looking at the sea, the other one looking inward to the car park. Very different price. So very hard to mark to market. Not every day there's transactions. Interest rates are low. Okay. Now the next point is this: you should not leverage on stocks unless you are very good. You can extract all your money out, but you can extract all your money out of a good property and yet retain control. That is the brilliant things about it. Okay. What do I mean? Okay, if you have a portfolio of stocks of 50,000, all right, you borrow 25,000 out to buy something. You want to go to school, university, or whatever. Now, if the stock portfolio drop to 30,000, you will get margin call because they do not allow you to drop so much. You can only maybe drop 10. Now, property, if you have $100,000 worth of property, you can borrow, after a while, you can borrow 70,000 from the bank. Is called a loan, a debt. Am I right? A debt from the bank. Do you still own the property? Yes or no? Yes. You still own the property. It's under your name. It's under Mr. Bradshaw or Miss Bradshaw's name. Okay? And the only thing is you owe the 70,000. Once you pay off whatever is left, it is yours. Right? So you can retain control and yet borrow money from the bank. So of course, OPM, that's the beauty of it. You can use other people's money to buy property. Okay? If you don't have enough money, you can get a few people together and then combine. Okay, we'll show you how. We are actually telling you, we are sharing with you a journey. It's a membership where we train you along the way to understand how to get there. Okay, stocks, instant feedback. You must be very calm as a person to buy stocks, because the moment you buy, let's say I tell you this is a support line, 200-day moving average, the stock drops below it, because I will talk about stocks a little bit. Now, if it drops below that and come out, you say, oh shit, the support line doesn't hold. Why should the support line hold? The support line is there because it has been supported 3 times, doesn't mean that the 4th time it will hold. And the 4th time you buy, I've seen it many times, it will just drop, and sometimes even it drop further, like Novo Nordisk. It's simply the support line is theoretical. You just assume that there are people there buying. So you get instant feedback. But property, there is no feedback. Property is a business. Once you buy, there's tenant management, there's property agents. So property is a business, not passive. It's a higher entry level, but it also can be low entry. There are many ways to do it. Okay. And you can get huge profits. You can do amazing things. For example, if you own commercial property, there are many things that you can do. Even on your wall, you put a drinks machine outside, a vending machine. You can rent out the space and you create a increase in value, isn't it? Increase your income and it's all in your control. So it's a business. It's a different kind of DNA to be that person. Okay. Now, next. Okay, now. I did a study between property and stocks for Singapore versus S&P 500. Okay, if you don't leverage on property, the first line, if you don't leverage on property, your returns are simply here, unlevered. Okay, it's simply this one is after tax. For reality, it's about 3 to 4% return per year. Okay, including rent, maybe 6% without leverage. Okay, now this is S&P. Stocks do outperform property when you don't leverage. But what if you leverage? Okay, if you leverage 50%, it gets more interesting. Okay, in the blue colored line, sorry, in this blue colored line, is you leverage 50% but no rental. So here, this is the blue colored line. Okay, now this one is unlevered, no leverage. Now, no rental and rental makes a big difference. Over here is 50%, but you rent it out. 50% loan to value ratio, you already achieve close to 15 to 20% return. From $1 million, after 20 years is 12.8 million. Now, if you do 75% loan to value ratio, that means $1, you buy $4 worth of property and you collect rent. The return shoot up to 76 million in 20 years. The compounding is 23% return. That beats a lot of people. You know what I'm trying to tell you? Now, then the question you have is, how are you going to navigate this? Is it going to be very risky? Okay, so that your own property where you live in